Hi, today we are going to address this important subject, rumors and share price manipulation. This is happening right now in the US stock market with the knowledge of authorities, and they are not doing anything about it. Completely legal. Investment firms involved, individuals involved in these rumors, and I'm going to address specific examples where the investor is losing a tremendous amount of money by believing in these rumors, therefore falling into the situation of gambling scenarios. Not long ago, there was a rumor that Twitter was going to be acquired by Google. That was coincident with the very top in Twitter. The share price, they spiked to $53 an ounce. That was the very top. That day I announced that I sell shares of Twitter, and a couple of weeks later Twitter crashed all the way down to $36 an ounce so far. This is not the first time it happens. These rumors, and upgrades, they happen precisely at the top. And I'm warning you because this is not a situation that is present only in Twitter. A couple of weeks ago, or not long ago, in fact, 1 week or so, started the rumor about Salesforce. Salesforce to be acquired by some other company, a buyout, eventually by Microsoft or Oracle. Well, I sent a real-time stock tweet selling shares of Salesforce at $78, so far the very top, once again using the rumor. Those that they bought shares on the rumor, all of them, they are losing money, since shares of Salesforce, they pulled back significantly. This is very serious because this is happening right now in the US stock market, I repeat, with the knowledge of the authorities, and they are not doing anything about it. What is happening is that the environment in the US favors this situation. Those that they issue stock ratings know about it, and this is helping companies which reported very bad earnings report to be bailed out. This is the reality as it is, and I'm going to refer to some other cases. Yesterday I saw other cases happening in this company Yelp. Yelp, not long ago, I believe that 1 week ago or so, reported a very bad quarter. It is the most expensive social media stock. Comparing to Facebook, well, I would prefer by far having shares of Facebook compared to Yelp. Yelp, as of yesterday, the price to earnings, it is around 350. Price to earnings 350, if not more. To give a clear example of these rumors and share price manipulation, yesterday there was a rumor about eventually Yelp to be acquired. This is other example of a rumor. So this is happening almost daily in the stock market right now in the US. The question that you have to make is, well, if Yelp is now open to for sale, why they didn't announce this when the shares they were trading, you know, at $70 or $85 when everything looked fine? It appears to me, or for those that they use the brain, that you know, the company might have some important issues. Because if Google, before Yelp was public, was willing to give $500,000 for this company, I don't see how then, with all these problems that Yelp has, and they are public, how they are going to pay $3.5 billion for this company when they don't have any competitive advantage compared to, you know, Facebook, or other potential suitors. So who is going to acquire Yelp and why will they acquire Yelp? I will say, what is the value that Yelp is going to bring to their balance sheets? Because if to buy a company at a market cap $3.5 billion, I have to be certain that I'm going to have an important return on investment. Otherwise, why would waste or blow up $3.5 billion US dollars? It does not make sense. And it does not make sense when the company, these rumors, they happen, and the shares, they zoom 23%. I'm fine with it because yesterday I took advantage of the momentum in Yelp. I issued a stock tweet selling shares at $48.20. I used the momentum intraday on a second account since I'm short Yelp on a long-term basis. But we could see this happening on the tape because today, a couple of days ago, we warned those short the stock to reduce the position sizing on the short side at $38. So how, when I mention that there is share price manipulation, I'm 100% certain about it because I can see it on the tape happening before these events or news they are announced in the stock market. This is the clear example of our competitive advantage compared to others when we see this on the tape. And because I'm an expert and I see this on the tape, I don't need to get the news. I don't trade or invest in the market based on news. But this is very important because I'm affirming here with 100% certainty that there is share price manipulation in the US stock market about these rumors. And then investors who believe in these rumors, they are losing a tremendous amount of money. Now let's see the incoherence of these, some of these stock analyst ratings in these companies. So Salesforce, quite frankly, I don't see this company, even in the scenario of being acquired, I don't see anyone paying more than $82 or $85 for Salesforce. This is my opinion. So at $78, I issued a sell alert recommending to sell Salesforce, because why would I remain long Salesforce just for a price of 82 or 85 which no one is certain about? It does not make sense. It is gambling. You understand? So if I had a long position in Twitter, and that was the case, and if my price target, for example, in Twitter, it was at most $56, at $53, I will not remain long Twitter because I issued a sell rating, a sell in the sense of closing long positions on that same rumor, because I was not going to remain long Twitter just because of eventually the stock to move more $3. That the reasoning is precisely the same. And today you have Twitter. I'm going to show here a Twitter chart for your reference. These decisions, they have to be made precisely. You see, it was 1 month ago, in April, the shares, they were trading at $53 an hour, and today they are basically, $37 an hour. And this is very serious. These rumors are helping those that they have speculative investments in the market to be bailed out. Now let's see about this other example, a clear attempt of share price manipulation in shares of Herbalife ahead of earnings with spreading rumors. This is other example that the company was going to miss earnings, and the earnings, they will continue to deteriorate. That is a very well-known case. You find the review on our website stockmarketlife.tv. And today, instead of having a crash in Herbalife, you have the shares yesterday and before yesterday at basically a new 52-week high. So this is other example that I addressed, that I explained, a clear attempt of share price manipulation on the media ahead of earnings announcement by saying that to be 100% confident that the company would report something negative, and therefore if someone is 100% confident that the company is going to report something negative, I call it attempt of share price manipulation, because or the person has insider information, or the person it is misleading investors. All right, so this is simple. Now let's see other example of share price manipulation yesterday on this company, Yelp. Yelp, I repeat, it is the most expensive stock in the market on the social media sector. It is by far more expensive than LinkedIn. LinkedIn also plunged after earnings announcement. They were maintaining upgrades ahead of earnings announcement, most of the Wall Street companies, and after the company reported earnings, well, they were downgrading the stock. Well, I can tell you that LinkedIn, even at $200, it is by far less expensive than this company. I can tell you that this company, it is outrageously overvalued compared to Facebook. Facebook, it will be worth, almost 2 times more, or even further, comparing to Yelp. So something is here, it is not, something here in what is happening, something it is not right, all right? What you see in the US stock market. Besides the policy right now, that is the way things they work, is quite simple to explain. When Buffett he refers to the stocks to be eventually, in fact, very cheap compared to if you have in mind that the interest rates they can remain low for a long period of time. Well, it is a fact that if interest rates they remain low for a long period of time, the stocks on a long-term basis they can be considered cheap, because the gambling scenario in the US stock market continues. That is basically the reality. Okay, so in shares of Yelp, this analyst, as an example, you can search on Google, had $70 price target or so. After earnings report, this May earnings report, one of the worst earnings report this quarter in the US, the same analyst cut price target to $52. And within the same week, after this announcement that the company is now for sale, the same analyst increases again the price target to $66 or so. So what you see the pattern here? These individuals are helping the gambling in the markets. This is what is happening in the markets. Now, next week or next month, what is going to happen eventually at some point is someone, again, the same rumor about Twitter circulating. And why this happening? You have to think about why is this happening in the markets. This is happening because these companies, they are losing millions of dollars. All these companies that they were buying Twitter at $53, at $50, that they were upgrading to $65 ahead of earnings, they are losing millions in the markets. That is the reason why they put these rumors circulating. That individual that has a short position in Herbalife, he came on TV probably because he's interested that the shares they collapse. He's defending his position. I call it an attempt of share price manipulation. I have a different opinion. All right? And this is the reason why there are these clear attempts of share price manipulation. And this is happening on TV. Everyone is seeing this happening. And the authorities are not doing anything about it. This case of Yelp, it is one more clear example of share price manipulation. The company misses earnings by a considerable margin. The company crashes 18%, in fact, by far more. And yesterday it was up 23%. I repeat, I don't have any problems whatsoever with this because we knew about this. I can prove it. I can give the information, I can prove it, where we recommended to reduce the short position in Yelp at $38. And this was when the stock touched the $38 ahead of this announcement. Using a second account, we made use of momentum all the way up to $48.20. It was an announcement on my channel on Twitter, but we maintain a bearish short position on a long-term basis. Because, my friends, who is going to buy this company? I mean, obviously, you might find a buyer for Twitter, you might find a buyer for Salesforce, you might find a buyer for Yelp. But who in their right mind, I mean, in Salesforce, we cannot compare Salesforce to Yelp, all right, or to Twitter. Twitter is a global leading brand. What is happening in Twitter is that the management has been unable to monetize the platform, all right? They basically, so it is a management issue. In Salesforce, it is not a management issue. In Salesforce, I read Mark Benioff's book a couple of years ago. And if you read the book, Salesforce, it is his project. So I don't see, quite frankly, I might be mistaken, I don't see this individual selling the company. It is his project, all right? Why would he sell the company? I don't know, might be mistaken again. But even if I'm mistaken, I mean, Salesforce, the reason I recommend to sell at 78 is because I don't see anyone paying more than 82 to 85. So why to remain long? Even if you believe that Salesforce is going to be acquired, it is preferable to buy the stock on weakness, I will say, rather than to follow the rumor, right? So, when you look at Salesforce chart, you see that the shares, they zoomed all the way up to $78, then the next day, or the following days, they traded down to 71. Well, 71, it is not 78. There is a difference of 10%, right? But you are still believing in the buyout rumor, okay? As it is here, because shares are trading at new highs, right? And I'm not sure, but today I think that there is probably a gap to downside, looking at these pre-market prices. That is to say, if this is correct, that if Salesforce today is going to open lower, yesterday those that they were buying shares at $75 or so, today you are going to have a loss. So I don't understand, quite frankly, why people, they are falling in these gambling scenarios. If you are an investor in Salesforce, well, at $78 you have to make a decision, my friend. This is simple. If you are an investor in Yelp, yesterday the shares, they zoomed to $48, you have to make a decision, right? If you are losing a lot of money in the past by, buying shares at $80, at $90, $70, $65, you have these rallies, these spikes in, that you see on the chart, the patterns are the same. Salesforce, Yelp, the Twitter case, and so on. So if you are losing money in the markets, I repeat, this is an opportunity. They are giving you opportunity to bail you out. This is why gamblers are bailing out. This is what is happening in the US stock market. And again, I repeat, with the knowledge of the authorities. They are not doing anything about this. And I think that some of these rumors, they are not, I will not say all of them, but there are here rumors then they are all over the news. This is all over the news. Suddenly, Yelp, that was not a company to be acquired, suddenly there is, it appears that there are 10 companies interested in buying Yelp. I mean, this is all to sell articles on magazines, to speculate. And this is all about speculation, but speculation, it is not investment. You have to differentiate between to speculate and to invest. If you buy shares of Yelp at $48, you have to think, well, what I'm looking for is someone going to offer, $66 for Yelp. Someone is going to offer 55, 52. And then, for example, the shares next week, they are trading at 52 and you are very happy. Well, but then, for example, company, for some reason, there is an article, again, another rumor that says, there is no potential suitor for Yelp. No one is interested in Yelp. And then the shares, they collapse, 25% or 30%. Or if that article does not appear, once again, the company, next earnings announcement, if they repeat the same, well, the company then, I don't know what is going to happen. You know what is going to happen? So, or you know what is going to happen and you plan for the worst case scenarios, my friends, or you are gambling in the markets and then don't complain if one day, it happens what it happened. I live with the chart in Twitter, where everyone is upgrading the stock at the very top, once again as it happened in 2014, with buyout rumors about Google. Does not make sense, in my opinion, Google to buy Twitter, but there are individuals that they have articles like Jim Cramer and others that they do believe that there are strong reasons to buy Google, to buy Twitter, to Google to buy Twitter. I don't see any reason for Google to buy Twitter. But nevertheless, even if you believe in that to happen, again, I repeat, it is by far, it is completely different to speculate. I repeat, to speculate at 37 compared to $50 or higher. I would say, based on the past history, the same is valid for Yelp. These are speculative instruments. That is not the case with Salesforce. Salesforce is a global leading brand which has a unique competitive advantage in their sector. The case of Twitter, it is not the case of Twitter, okay? Twitter, it has never proven anything. It might prove in the future. So far, it has not proven anything, all right? So if you want to gamble, don't gamble, after there is the rumor on the TV or on the news, on Wall Street Journal, you have to do it ahead. Otherwise, once everyone knows about the rumor, probably what they are going to do is to use the strength, to be bailed out because they have been losing, millions of dollars. These guys, when Yelp it was trading 1 year and a half ago, at $90 plus, they were upgrading the stock. There were analysts, instead of downgrading the stock to strong sell, explaining to people that on a long-term basis these companies condemned, that their business model, they don't have any competitive advantage. Instead of explaining this to people, to investors, they were upgrading shares of Yelp to $100 plus, $100.10, my friends. This is the same that happened in 3 years ago when a company called Abercrombie, they were trading at $77 and the analysts, they were upgrading to $90 and $100 plus. And today you have Abercrombie at $22, a company that has never had any competitive advantage, evaporated. And so these analysts, they are paid to, they call themselves professionals, they receive a very high salary, and in the end they don't have any vision whatsoever to explain to investors what the company, in fact, is likely to do on a long-term basis. They should have explained, for example, that Nokia or the former Research in Motion BlackBerry today, that Apple would kill these companies in particular, obviously, both, does not matter, all of them. And therefore, these companies, instead of upgrading BlackBerry continuously as it happened, the past 4 or 5 years, they continued upgrading and not ever calling that, BlackBerry would trade down to single digits. That is basically what it deserved. And then you remember also a couple of years later, and 1 year later and so on ago, that these rumors about BlackBerry, about buyouts, they continued. They continued for years. There are rumors about buyouts that they continue for years. Why? Precisely to help those that they are losing millions of dollars to be bailed out. And the authorities, they know about it, and they don't know anything about it. I don't have any longer a position in BlackBerry, I don't care. But this is the reality. Okay? So I hope that this has been clear. And my friends, I hope that this, explanation and why is this happening? This is happening because the policy in the US, it helps this to happen. When you maintain low interest rates for so long, this situation, these gambling situations in the market, they start to happen. And they will continue to happen. They will continue to happen. You don't know where it is going to come from. The shares, they are halted for some unknown reason, and the rumor appears on the news. Now, I think that this is serious because this does not create a healthy market. This does not create, this is only good for trading, to speculate. And then you have on the news, I believe it was on CNBC or CNN, I don't remember exactly, but you have that title, the retail investor is not in the markets. I mean, you have to understand, why would he be in the markets? This is all about gambling. This is all about gambling. So why the retail investor? Probably some people, they are looking at this and they will say, I mean, unless I have, a methodology, unless I'm a professional, unless I have access to the information, my probability to make money in the market is going to be very, low, because the price of what is happening in the market, it is all about manipulation. And so if I was working, I would say that authorities, they should be looking at this, because this is what is happening, does not help people, to gain credibility in the markets. It is precisely the opposite. And so when you maintain the interest rates for so long, so low, and they will continue to be without any fundamental reasons, does not matter, just because they don't have a clear solution, to raise rates. All right? So you have the unprecedented conditions. It's all about gambling, all about, and you have to have a clear methodology to invest in the markets. And it's not complicated. There are, in fact, common sense rules. All right? And one of the common sense rules is you do not buy, no matter what, do not buy after the rumor it is on the news. If you want to buy, speculate for some reason, buy ahead of the rumor. Even if you don't know about the rumor, for example, today, might, thousands might be buying Twitter because they believe that Google, the rumor, is going to be on the news next week or next month. And this is the reason why they are in Twitter. It's not because they believe, that this is the reason why they are buying Twitter. They are not buying Twitter because they believe in the company or the management. They are buying Twitter for the rumor that eventually is going to appear next week or next month. You have to understand that this kind of, what is happening in the markets, in Twitter, in Yelp, in, Salesforce, in Herbalife and so on, it is helping people to create this kind of beliefs, to invest in the markets, to gamble in the markets. This is creating gamblers, this is not creating investors. This environment, I remember to see this in 99 or 98 or 97, when Greenspan said that the markets, they were a bit irrational. Well, he said that ahead of the top, and then the markets, they crashed. But the environment at that time, it was very similar to this. So I would be very careful in the sense of, if you believe in the rumor, at least buy ahead of the rumor to exist. Don't buy then after the rumor it is out. And by the way, some of these rumors, they should be illegal in my opinion. They are criminal. Because, I mean, the rumor, I can have a company say, look, I'm losing a lot of money, I don't have any solution for my company, everything is negative, I know that this one day is going to disappear, it is going to be like probably BlackBerry, and so I open for sale. Yeah, I'm open for sale. Why not? Let's, Google now, they have plenty of cash, the interest rates, the cash is free, so let me now sell to Google or some other. This is an insult. This is an insult to Google, I believe, to Google management, or, to Facebook management, but, they are relying or gambling that, I'm for sale. I know that my company is screwed on a long-term basis, but I'm for sale. Obviously, it is a wise move. The timing, it is good. Why? Because, and why this is happening? I don't believe that, for example, the CEO of Yelp, he had that is clever or intelligent enough to have this, this strategy. This is the right result of some investment firm, eventually, to tell him, look, you are losing money. You don't have anything, in long term, you are going down. So, my friend, you have two possibilities. Or you listen to what I have to say, and I have a short position on your shares, and you are going down, or the other possibility is that you open your company for sale and we speculate on the long side and we bring your shares up. And at least, I mean, your company or the shares are still there floating and the company appears to be alive. Do you understand? Or you understand the methodology, the reasoning? This is the strategy. This is the reality. It is, my friends. It is. So, you have to be inside, you have to know how these games are played. If you don't know about this, it's better you are not in the markets. It's better that you are, you work in your, what you do in your daily life. But otherwise, if you are not aware of these games, my friends, it's better, I repeat, that you are not in the markets. I hope that this lesson helps you in the weeks ahead not to fall into these gambling scenarios, or if you want to profit from them, at least profit or do something about it ahead of the rumor.